Let's bring him in, Mr. Craig Bolanos. He's with VestGen Wealth Partners. He's a co-founder there in Chicago. Craig, thanks for coming on. It's probably good that I lost connection because I didn't get to talk about what was going on in the equity markets. But let me just lead off with this, and I'll hand it over to you. Yesterday, we saw corn, beans, and wheat tail off big time, and we had some significant losses in those markets because they didn't hear anything out of the meeting with Xi. Now it's the equities' turn. They didn't get what they wanted out of the meeting with Xi. There's nothing really that came out when it comes to Iran and getting this over with. That's got crude oil run into the upside, and now it's the equities' turn to really kind of take it on the chin. What say you?
Well, I'm actually encouraged. I mean, we actually had all those American business leaders plus the president in an open and transparent discussion with our foe, with our competitor, not our ally, but certainly our trading partner, China. And I don't think people can expect that progress gets made just in that event. All the dealing gets done prior to the event. The rest of the dealing gets done post the event. So I got to think there's some net positives that are out here. I tell people, what would you rather do? Have us not even meet with them? No, I think this is a net positive. Boeing's happy, Nvidia's happy, and I'm sure the rest of America is going to be happy. The only people not happy right now are the mortgage brokers. I just saw the 10-year back over 4.5 and the 30-year over 5 this morning. That says danger.
4.55 was last when I checked before we went on the air. You're exactly right, and that's going to be, that's going to be an issue going forward. And everything else had been lined up. I just checked the Atlanta Fed GDP now as we've gone on air here. That's gone from 3.5 to 3.7 to 3.9 now to 4%. So our growth is up at 4%. That's stupendous, and we've had such fantastic earnings. But there's been one thing that really hasn't fallen in line, and there's more money that's traded in the bond market than we have in the equity market, and that's that 10-year yield, 4.55% right before we came on air. That's going to be something that's also got the equities on the run to the downside. Wouldn't you agree?
Well, yeah, I mean, these higher inflation prints, end up having their impact on the interest rates, and the interest rates are a direct attack against what could be high octane growth stocks. There's no doubt about this. It could be a 1-2 punch. Yep. I long thought that fair value on this market was somewhere in the 72 to 7,500 range on the S&P contract with an outside chance to get to 7,700. We got to 7,500 yesterday, and I'm pinching myself. It's not even Memorial Day, everybody. So do a little bit of tactical rebalancing here. That's not a problem, but the overall health of this economy is fine. I looked at those retail sales. They were good. The jobless claims continues to circle in that 200,000, which is this post-pandemic nirvana that we've been in. So right now it's a no hire, no fire. But hear me say, no hire, no fire. We haven't yet moved into no hire, more fire. When that happens, I'll get worried. But for right now, this is pretty darn good.
Yeah, I mean, you're right. And again, like I said, with the earnings and the GDP, our growth, and all the things that have come through with that one big, beautiful bill. I mean, I am very excited about the economy. But then also, we are, I don't mean to be a Debbie Downer here. I'm not trying to borrow trouble. But we do have a lot of folks that are struggling, and it doesn't help to have high gas prices and high food prices right now, does it? Or doesn't? And it doesn't help anytime, but especially now. What do you think?
No, Scott, I'm tired of eating Special K cereal for breakfast because there's two ends to that K, those who are doing so well and those who aren't. But shout out to you. 2 years ago, you told everybody, I remember, we do a lot of work together on your programs. You had said we don't have an income problem. Everyone's always focused on the income side of the ledger. We have an asset price problem. That's exactly what we have. And that asset price problem is directly attributed to the excess stimulus that we provided the patient at the time we did not do. I don't know when we're going to learn our lesson, but we're certainly paying for it right now. Because if you didn't have a chance to already own the home, you didn't have a chance to already build for retirement, your income, believe it or not, is A-okay by historical norms. It's just those asset prices have risen too far and they're outside people's reach.
Yeah, I mean, when you put the numbers to it, it's all over the internet. I can't remember how far they had to go back to get these numbers, but say it's maybe about 25 years to the turn of the century. Things that we use on a daily basis that we need to live, those things are up 273% in price, and your income is up 93%. which, I mean, it's just a math issue. It's all right there for you. So, and I also, when you pour that much money into the economy in 2019 and 2020 to try to stave off this big boogeyman called COVID, and you don't give us anything else to buy with it, this is also what happens, and that culminated in, record high 40-year inflation in 2022. So we need to remind everybody where we've been and where we're going. I get it, but there's still, I just hate getting off air and then get back to my desk and I get these messages from people saying, yeah, we'd like the world to be safer. We'd like Iran not to have any nuclear, warheads, but I also need to put gas in my car today or tomorrow. And those things need immediate attention. And I understand that. You know what I'm saying?
No, they do need immediate attention because the throughput, the input prices matter for absolutely everybody. Right. But I think there is a message to investors out here right now. And there's a lot of people, Scott, who are building their wealth. And there's a lot of people who are maintaining their wealth. Those who are maintaining their wealth are primarily doing some of that through fixed income and hard assets. And I just want to remind people that bonds remain good, but you need to own them in the right type. I think people need to own bonds with permanence and definition because there's a lot of people who are just in proxies for bonds like the aggregate bond index. And when you don't have a maturity to protect you, you run into trouble. And that's a lesson that everyone should have gotten in 2022. It's another lesson showing its head in the spring of 2026. And I encourage people to most certainly reach out if they want to learn more.
Another lesson that we're learning, Craig, is how integral oil is to our economy and the world's economy. And the idea that the last administration was trying to wean us off of it now looks even more ridiculous as the world's biggest virtue signal of all time. Because look how much oil is affecting just inflation outright, fertilizer prices, food prices, obviously what you pay for your gas at the gas pump every day. I mean, it is such an ingrained part of our economy to think that we were even trying to comprehend getting off of fossil fuels and moving to wind and solar. To me now, if this doesn't tell everybody and show everybody what a ridiculous virtual signal idea that was, I don't know how else to prove it. What do you got to say before we go?
Well, I just think what matters is this energy. I actually don't have a preference as to how we get it done. I just care that we remain energy independent. And I would prefer that we remain an energy exporter. So whether it's crude, whether it's fossil, whether it's clean, whether it's this or that, I just care about having the energy because those that have the energy are going to be able to power the data centers. Those who have the data centers are going to be in P1, the pole position for artificial intelligence. And everybody knows that's the new arms race. So let's just get the energy solved, however it gets solved. But it's true. We need to respect our past and acknowledge to looking towards our future to find a diversified energy complex to make sure that we remain long-term viable as the dominant economy and world player that America has always come to be and still remains today.
Awesome stuff as usual. Love having you on Fridays to get us started here right before the weekend. Craig Bolanos coming to us from Chicago, Illinois. He's the co-founder and wealth partner of VestGen Wealth Partners there. Thanks for being on the show. All right.